So it's Monday and I'm back with another chart recap. So I just got stopped out and I thought why not record this video and show you guys the trade that I took today. And the process of me passing this funded account. I mean like it's not taking that long, but I made a mistake as if you have watched the last video, you know that. But yeah, let's get into this video. So to just show you guys that I have taken the trade, look here, $400 and look 30 September, Monday, I'm showing you guys everything. And on the last trade, we lost $450, which was a mistake. But yeah, let's get into the video. So going through my daily bias for the day, I was bearish. To be honest with you guys, look just on the hourly time frame. So this is market open right around here. So if you look, 1 hour is completely bearish. If you look at the 4 hour, 4 hour is bearish. And then what do we have? So we have this 4 hour high, higher time frame liquidity to the upside, and this low to the downside. So if we go on lower time frame on 50 minutes, let me just mark this. So as you guys can see, since I was bearish, I came on lower time frame. We did have this lower time frame liquidity to the upside, so I marked up this 50-minute high and this 50-minute high. So I needed to see liquidity sweep because that's one of my confluences, and I was gonna target this low over here because as you guys can see, on the hourly price had already moved all the way like too close to this low over here. So I was like 100% that price wants to come to take out this sell side liquidity, and bearish on the 4 hour, bearish on the hourly. Of course, there is a big chance that it wants to come and take out that. So I literally, what I wanted, that happened. I wanted this side to be taken out, that happened. But if you go on S&P 500, there was also an entry over here. I did not take that because I did not like it that much. But it was the same. Like if you go on hourly is completely bearish before the market open, as you guys can see over here. 4 hour completely bearish. We have this higher time frame liquidity and this low over here as sell side liquidity on the higher time frame, which was this hourly low over here. So as you guys can see, again, price had already moved to the downside. I was sure that wants to come take out these since hourly is bearish, 4 hour is bearish, and if we go on lower time frame, I came marked up these 50-minute high over here and these 50-minute high over here. And let me show you guys one thing. We did have a setup also here on S&P 500, which I did not took, and I'm gonna explain to you guys in a bit why I did not take that. So first of all, let's go through our actual trade that I took today. So it was, I got stopped out around here, so you could see it was 2.6 RR. And so let's talk about my confluences. First of all, we had this high when market open. As you guys can see, price come and took out this high. We did have this news Chicago PMI, which I waited for. And after that, as you guys can see, we have this inverse fair value gap, like however you want to look at it. So I just marked that. So these got disrespected over here, like before the micro, like before the time frame when I take my trades with 1550, and I waited for the news. So we got disrespected completely, and then I did not take the trade because I did not see my third confluence. And then we had this small BPR over here. So let me just remove this fair value gap. And if you're wondering, this was the bullish fair value gap, the inverse fair value gap that got disrespected. So we had this small BPR over here, or you want to call it the bullish fair value gap, which price did play into this a bit, like look, we did see price come into this once and see a big rejection to the downside, which I did not do because this was the news candle. So there would have been a chance that a lot of people maybe took this trade like this. That stop loss may be just about this high, and you would have been stopped out. I did not take that because I did not like this was a news scandals. I had to wait for 1550, which happened right around over here. As you guys can see, price was rejecting. We made a doji candle over here, and then we see a big push to the upside, and I was like, okay, it's 100% gonna go up to take out these liquidity over here, these highs. But that never happened, and then we saw a big leg to the downside, a big rejection to the downside, and that's when I entered. And I got entered right around over here. And if you're wondering that this BPR got disrespected, I know, but since we saw a big like push to the downside, rejection, and we see a sell-off, like a strong sell-off, I was confident enough to take the trade. And then again, we had this bullish fair value gap over here, which I marked out as my other confluence, as you guys can see. Price did come into this, fell into that. Like, if I had not taken that entry, I was 100% sure that I would have entered like this. Stop loss maybe above that high. But yeah, so I entered with 260 lots, and my first take profit was this 50-minute low over here, which got hit, and my second take profit was down here, which it almost got hit, but price is going higher, and I got stopped out because so this would have been like this. So when this got hit, I took off 50% of my position, and then I moved my stop loss just below this second take profit because I was like, okay, we have seen a big leg to the downside. There's a big chance that it wants to come and take up my final take profit. And then that's why I put my stop loss below this to just protect myself. And then boom, I got stopped out. And if you go over here on S&P 500, let me explain why I did not take the trade. So as I said, we had marked out this high over here, okay, as a liquidity sweep. We did not see any kind of liquidity being taken out on S&P 500. Okay, let me just remove this. So as you guys can see, we do have like, boom, this was inverse fair value gap, boom, we broke 1 minute structure to the downside, and then let me just remove this to this. So as you guys can see, this was the inverse fair value gap that got disrespected. Then we had this bullish fair value gap over here, or you want to call it a BPR, whatever you want to do. So we see price come into that. We see a big rejection to the downside, but I was gonna wait for the news. So this is when the news came, and we see again push to this fair value gap, and then we see a rejection to the downside. So why I did not take the trade, because it wouldn't give me a good risk reward ratio. Like look, it would have been giving me only a 2.75 risk reward ratio, and as you guys can see, we have already hit our take profit over here, which would be a 2.6 RR. But if it had hit our final take profit, that would have been a 4 risk reward ratio instead of S&P 500 2.7, and my stop loss was gonna be like too wide. Like this wouldn't be giving me too good risk reward ratio because I would had to put my stop loss above this liquidity, because that's when price pushes higher than that, that's when my trade gets invalidated, because we haven't take out this liquidity. There's a big chance the price wants to come to take out that, and as you guys can see, that happened actually now. We could have we could be looking for entry now over here to this low, but I'm not gonna do that. And yeah, that was today's trade recap. See you guys in the next video, and I'm gonna try to get better with this like quality of the video. I bought a PC, gonna set up that, and let's see if the quality of the video is going to be any better. Yeah, see you guys on the next video.